All right. Good morning, everybody. Good morning. Good morning. Good morning. Okay. Get that turned down over here. Get a drink of water. All right, boys and girls. It is Friday morning, January 30th, 6:30 a.m. Central Standard Time. I'll be on for the next hour and a half, as always, and we'll see what kind of goodies we got for the day. As always, we will start from the economic calendar. Let me get that shared real quick. And I threw a poll question out, guys. Just let me know: are you profitable this week? Yes, no, or break even, meaning maybe you're just watching from the sidelines or studying or learning. Okay, maybe you're not quite to the trading yet. Maybe you're just trying to figure out how all this mess works, right? So let me know if you would. Just go ahead and place your answers there in the chat. And as always, I do have a pretty lengthy alerts page. Okay, a watch list, active watch list, because we do have quite a few currency pairs on the bullish and bearish list for the week. So I'll go through my alerts after we go through the economic calendar. But let me know if you guys want me to bump anything to the top, any specific tickers, Forex, indices, gold, silver, Bitcoin, stocks, even stocks, guys. Okay, I do trade probably the top 25 large cap stocks. Since I do have the stock box with A1 trading, it's another really cool tool. Okay, if you guys are into stock trading, as well, or maybe on the side, or maybe you're just trying to figure that out as well, there's a stock box. Okay, so this gives us a similar top setups list right here. Just depending on what it is you're looking for, there's all kinds of tickers on there. Now, my challenge accounts only have 25 of these on here, so I always kind of go through every single morning. And let me go to the top again. I go on here and I just select only the tickers that I have. Okay, so I haven't done it yet on this list, but like, for example, I have Apple, I have Amazon. I mean, I got quite a few. We'll dig into this a little more later. BA, BC. I'll finish this list here in a bit. But yeah, it does the very same thing that the top setups page does on the Edge Finder for everything else. It's just isolated for stock. So it's another really cool feature that Trader Nick has. Okay, you can dig into any of these stocks and dig into the price, earnings, price to sales, everything, the revenue, earnings growths, all kinds of stuff. Okay, so it's another quick way to, at a glance, see what's potentially about to move, shaking and baking, right? So there you go. That's the stock box. As always, guys, you can always go to a1trading.com on here. By the way, he has a free Telegram that you can also join, and he puts him and his team put a lot of really good articles on there for the topics du jour, as well as items that they're looking at potentially to be trading. So yeah, that'll be right here under Edge Finder, or excuse me, under Stock Box. And then for Edge Finder, what I use every single day, all day, every day, and I look at all day, every day, you can find that here. So yeah, again, a1trading.com. That's Trader Nick and company. They got a lot of really cool items, and they're constantly growing this thing. I mean, between the Stock Box and the Edge Finder, okay, they're always editing and updating and upgrading and making this thing just super fabulous. So definitely check it out. This is how the way I found Trader Nick was through the retail sentiment. Okay, I used this for free for quite a while because he does have a couple teaser items from the Edge Finder that he does put on here that you can go on and just take a look at to add to your analysis. So this is a free item on there. Okay, the retail sentiment. In other words, looking at the average retail trader, the average trader at home on their computer or maybe their smartphone or whatever the case is, and seeing where they're positioned. Because as we all know, and the stat reads a couple different ways depending on where you hear it, most traders lose money. Most regular traders lose money. 90% of traders lose 90% of their money within 90 days. Okay, That's a common stat you hear out there. It's an ugly stat, but it is a correct stat nevertheless. So if we know that, most people lose at trading, do we want to look and see what they're doing and maybe perhaps do the opposite? Okay, as a contrarian signal? Absolutely. So this is something that I really got deep into here a handful of years ago. And when I discovered Trader Nick and I discovered A1 Trading, I discovered that this was on here for free. So I dug into this and thought this was the end all be all for quite a while. Okay. Had a little bit of early success with it, but it wasn't anything that was consistent. So that's when I decided to dig in deeper to the full Edge Finder and understand GDP, understand inflation, understand the growth metrics, the jobs numbers, all that kind of stuff. The stuff they talk about on CNBC ad nauseum. Okay, when they're talking about investments and trading for all kinds of different assets. So anyway, awesome tool, guys. This is the best investment I've made in my entire life. Probably my second best investment was when I actually learned how to trade at Online Trading Academy. Okay, but that's all for the technicals, OTA. Okay, when I learned how to trade supply and demand, I thought that was the end all be all, finding supply and demand zones. Okay, I did that for years, but then I come to realize that as important as it is to understand the charts, when it comes to fundamental analysis, sentiment analysis, and then technical analysis, the charting, it's really the least important. Okay, it's real, in my opinion, and I agree with Trader Nick and the guys that work with him. It's the least important thing because, again, I go back to it every time. When you watch CNBC, when you watch all the news outlets, they're not talking about a 5-minute chart. They're not talking about a 15-minute chart, a moving average crossover. Okay, that's noise. Now, it's important, but it's not as important as understanding the full direction of the assets. Fundamental and sentiment analysis tells you where things are generally going. Okay. The chart just helps you to time that entry. That's all it is. So anyway, go check them out, guys. I promise you, no matter how new you are or advanced you are at trading, this will help you a ton. Talking about the Edge Finder. Okay. First thing I look at every single morning, top setups. Hey, what's the biggest potential movers? Now remember, I said potential. So this is not saying New Zealand Swiss, go smash the buy button right now. Aussie Swiss, New Zealand dollar. That's not saying go smash the buy buttons. Just like the short side items are. Euro Aussie, okay? Euro New Zealand. It's not saying go out and smash the sell button. It's only giving you permission to go look at the chart. That's the way I interpret this. Okay? And I'm sure that's, for anybody that uses it, I'm sure they would agree. This is our boss. This is our matrix. Okay? This is our delegation for the day as far as what we're looking at. So, and then the charts, again, just helps us to time it. It's as simple as that. Now, I didn't say easy because it's not easy. This stuff's hard. Trading is hard, even for advanced traders and traders that have been around a while. I've been in this thing 12 years now. Okay. Earlier this month was my 12-year trading anniversary or trade-iversary. Okay. So I'm only now really starting to understand a lot of this stuff. But I also kind of did things the hard way for quite a few years, thinking that the charts was the end all be all, the technical analysis. Okay. So I had to kind of rewire my brain to start focusing on the stuff that matters. Okay. The big banks and the smart money. Okay, what are they doing? What are they doing on the COT report? Because if they're the ones that are making all the money, then I don't want to be following the crowd, the regular retail crowd. I want to be doing the opposite because they tend to make silly decisions, buying breakouts whenever it's too expensive, selling breakouts to the downside when it's too much of a discount. So, again, this is your sentiment analysis. And now I need to collectively look at all this stuff. Where's all the inflation numbers going? Where's the employment numbers going? Where's the growth metrics going? Stacking as many of these items in your favor before you touch a chart is the most important thing because this is all the banks care about. Okay. And they care about crowd sentiment. Okay? They care to see where the liquidities are. Because if they're typically on the wrong side of the trades in general, then their stop losses are going to be in spots where the big banks are going to be taking the opposite side of that order. Think about a lot of prop firms. A lot of prop firms know all about this because a lot of them, okay, I'm not saying every one of them, but a lot of them are pretty much taking the opposite side of the trade from the customers that are in those challenges, those trading challenges, right? So I'm not going to name names on those because I don't know all the names, but I do know what happens. Okay, you pay for a challenge account, you go in there, you place a trade. Okay, a lot of these firms are taking the opposite side. Why? Because they know that the average trader loses money. It's a cutthroat world. Okay? We're swimming with the sharks, dog eat dog, whatever superlative you want to throw out there, but that's just the way it is. Okay? That's the way it is. Trading, at the end of the day, the only thing it is moving money from one account to another. We don't build anything. We don't sell anything. Okay. We're just literally transferring money from one account to another. That's all it is. That's all it is. When you break it down to the brass tacks, that's really all we're doing. I'm trying to take money from somebody else's account, put it in mine. Right. So anyway, just wanted to kind of show some love to A1 Trading. Trader Nick there at the outset of the show, because I can promise you guys this will change your trading life just like it has mine. So yeah, over to the calendar, guys. Here's Friday. Today we have on tap the GDP report coming out for the Canada dollar, our friends to the north, at 7:30 my time, so here in about 49 minutes. And we also have the dollar's PPI, the producer price index, that's set to come out the same time. Yeah, a little bit of a duo release there. So when it comes to Canada, now remember, a lot of these currencies have actually been on the positive side, meaning they've been exceeding a lot of expectations. Canada's right there with them. Okay? Remember, the major currency that we have right now that's not doing the greatest is the Swiss franc. Swiss franc still at a 0%, meaning it's missed expectations on every single report of late, every single high impact, medium impact, mostly high impact, but there are some of them that I think are medium impact in there. So 0. But Canada dollar, okay, it's one of the weaker among the strong currencies, if that makes sense. Okay, U.S. dollar is second worst on this list, but even so, it's still over half. Okay? It's still exceeding expectations over half of these items. Canada dollar right there, 57. So, if I'm just looking at this at a glance, then I would basically be wanting to buy all these currencies versus the Swiss franc. If you're just looking at pure economic underperformance and outperformance, that's kind of an easy way to look at this. So Canada, again, that GDP report comes out. So if that does in fact exceed expectations, then that'll obviously put the Canada dollar probably into the 60%. Let's go look at the last time the Canada dollar did come out with their reading there. And again, that was, the GDP month over month. So up here, okay, so look at this, guys. So last time the Canada dollar released, they actually had a bullish reaction, a bullish report. In other words, the previous number was negative 0.5%. The new number came out negative 0.4. Now it's still in the negative territory, but it's not as bad as they projected it to be. Okay, it was 0.1% better, or in other words, 0.4%. Yeah, so instead of being 0.5% worse, it was 0.4% worse. So still negative, but because it exceeded the expectations, okay, because it exceeded the expectations, that's why it got a bullish reading. So the only thing that this report can do is drop the Canada dollar. It can't increase it because, again, the last report was bullish. The last release was bullish. And again, the number that we're slated to get today is finally on the positive side, as you see here. Okay, positive 0.1%. So that would be nice just to see that the Canada dollar report came to the positive side. Let's go look at Canada's GDP numbers. Let's see here. Let's go find I need to go to economic data. That's what I'm looking for. Okay, growth data. So I need to go to GDP over here and look for Canada just to see kind of your recent history. Okay, so Canada, that last report was the first one that had fallen into the negative for quite a while. And remember, this is a quarter over quarter number. So this is actually, so look, Canada was on the positive side for that year and a half period prior to the last report. And then that had that ugly spill back in, is that right? August? Yeah. So I'm trying to do something here. Give me 1 second. I want to put some more data on here. Let's go 5 years. Okay, looks like that's about what we're going to get. So yeah, Canada's growth, guys, has been steadily down. Now, as you can see, what we had the previous period has happened a couple other times to where you had some okay numbers, and then all of a sudden you go to the negative, but then what happened every time? It kind of came back out. It came back out to the positive side. So yeah, there you go. A whole 1.6% change that period there in 2021. And then 0.3 the next quarter. But then over here, you started to kind of dull out for a while. Okay, 2023. Then you had another negative push, but then after that, you had some positive pushes. Now, but in each case, is this not, even if we do get the 0.1% today, okay, I mean, overall, it's still pretty lousy if you're looking at it from a longer term. See, it kind of trends down, does it not? So it's just not that great. Yeah, 0.1% is better than a minus 0.4%, what we had last time. But in the context of the recent, few year history, it's just down. It's not looking the greatest. But it would be a bullish reading nevertheless. So anything 0.1 or higher will basically keep the percentages the same for the Canada dollar. Okay. Again, because it already had a bullish reading the last time. Anything 0% or lower will turn this bearish, meaning we would probably go just slightly under 50%. Okay, I'm not a math wizard, but it's gonna decline the price, obviously. So all that really matters, just to sum this up, is it's already the second weakest currency, even though it is over the 50% line. In other words, the outperformance side. Well, it's not quite outperformance, but it's just going to make it a little weaker. So it's still going to remain the second weakest currency no matter what from a fundamental perspective. And then the US dollar is the third the least strong, if that makes sense. And again, this is just isolating just the fundamental analysis. This isn't the end all be all, but it's a pretty damn big chunk of what's potentially going to happen with these currencies. So Swiss franc at 0, and then just to look at the strongest, Aussie dollar. It's on the list. Aussie dollar, New Zealand dollar right behind it. So that's pretty much the same as what we were looking at yesterday. And then the euro is sitting in third. Yeah. And then when it comes to the euro, I do believe, they had some numbers. So they had an unemployment rate come out from a 6.3 to 6.2. So I think that's pretty high unemployment, but at least it's, at least it got a little bit less. So bullish reading on that. And the previous reading on that was a bullish number as well, because I do remember the euro was at 71% yesterday also. Let's just take a look at the weekly releases this week. So for the dollar, remember, we've just had the one at the moment, the jobless claims number. That was a 209,000. So it was 4,000 higher than the forecast on the unemployment rate, unemployment claims. So that's the only dollar-based release we've had in the last 7 days. But again, we will have the PPI number come out here shortly. And it is projected to increase on the month-over-month number, but remain the same. Or I should say month-over-month for the core. But the regular number is supposed to remain the same. So PPI, here you are. Last time we got this release back on mid-January, it was a bullish reading, okay, for the regular one. the year over year. Forecasted 2.7, but actually got a 3. So remember, that's good for the currency, not so good for the stock market. It's just one of those double-edged swords. Okay, when you're talking the inflation numbers, the producer price index, the consumer price index. If it's good for one, it's typically bearish or bad for the other. Okay, vice versa. So that's it. And we've got the euro. We've went over that. Looking over in London at the UK. Okay, the last 7 days, they've had their PMI numbers come out pretty strong, as well as their retail sales. So that was a pretty good look. Okay, and that's why the UK has been doing all right of late. And remember, this thing was down there pretty low, down there close to the Swiss franc. Swiss franc and the British pound were at 17% just 2 weeks ago. 2 weeks, 2.5, something like that. The Swissy has stayed in the cellar, but the British pound has had some decent numbers come out of late. Okay, and just beyond the 7 days ago mark, they had a good CPI report over there where they increased 0.1%. They did have the unemployment rate number come out, so it's still not the greatest. Okay, but that was 20 days. That was on the 20th, increased by 0.1%. And then other than that, the GDP report, we're still waiting on that. So again, that's coming up probably next week or two. But that's your UK. Let's look at the Japanese yen, Mr. Intervention over here. Okay, last 7 days, it's just had the one release. That was the unemployment rate where they nailed that. Pretty decent unemployment rate over there in Japan. Okay. Pretty decent, 2.6%. Okay, it's not 2%, but they're down there with us. As far as in the high twos, mid to high twos. So looking pretty decent in Japan on that. It's just the intervention scare we got to worry about. We'll take a look at the dollar yen here in just a moment, by the way. So that's that. Canada dollar. Okay, retail sales. Only report released at the moment. Now we got the GDP coming out later. But as far as the last 7 days, they did have a bearish reading on retail sales. Australia, the strongest currency right now. Last 7 days, they've just had an inflation reading. Their year-over-year number, where it did come out bullish, 0.2% higher than the economists predicted at 3.8%. So remains at 85.5% on the currency impact. So at the moment, it's still the stronger of the currencies, stronger of the 8 majors. And then remember, the New Zealand dollar is right behind it, right here, 83. So they haven't had any releases in the last 7 days. Looks like the last one they had was the inflation reading for them back on the 22nd, where they did have a slight bump up as well, causing that to go bullish, putting it firmly in second place. So there's your two stronger currencies right now, Aussie dollar and New Zealand dollar. And then as always, guys, I do like to, let's go to the Swissy. Yeah, so remember, Swiss franc, 0%. It's missing everything. They did have their services PMI number come out, which is an expansionary territory, but they did miss the forecast. Forecast was 52.6. It dropped 0.7 to 51.9. So not looking the greatest for our Swiss friends over there. 0%. And that's where it's been for last couple weeks, I think. Week and a half, couple weeks. So not looking the greatest. And then finally, guys, just looking at China, since China is a huge trade partner with a lot of these 8 major currencies countries. They're sitting at 2/3 exceeded as well. Nothing new from them since the 19th. Their unemployment was the only difference there, only change, 5.2 to 5.1. Slight good reading for them on that, and sitting at 66. So there's your up to the minute economic heat map levels, just showing you where is a strong place to potentially put your money into or take your money out of. It's just a nice list. Currencies are doing well. They really are. And then again, Trader Nick did add this history line in here. So as we get more data, as we get through more trading days, this line will really start to fill out. Then you'll be able to start getting an idea of the trending of these currencies. Hey, are these currencies trending up? Are these currencies trending down? It's just like anything else in trading. Anything, you can put a chart on just about anything if you stop and think about it. Okay, you can put a trend on house sales, house values, car values. Okay, things that you probably didn't even stop to really think about, but you can put a chart on about anything. And I just think this was just fantastic that he added this in here. Because I was the reason, and it's ironic because I was actually asking him about it if it's something he could create. He said, actually, I was going to. So they were already working on this. So great minds think alike. I was asking about it because of when the British pound was, again, down there at 17%. And then like 2 days later, it's up here in the 80s. I just thought, well, dang, it'd be nice to be able to chart this. It'd be nice to chart this. And lo and behold, that's what we get. Okay, Aussie dollar. It's kind of hard to see some of these lines probably from YouTube stream, but just look at little subtle things like this. Australia dollar, which is this light purple color, I guess. Just being able to see that line is right there, and then it's trending upwards like that from the 26th to the 27th. Well, that's a big piece of news. That's a big piece of data. Or likewise over here for the pound, right? Now the pound got that spike up here to the 80s, and then now, as you see, it's kind of trending down. It trended down back here on the 24th, 25th. So that's a nice little clue to say, hey, not to say if you're ever wanting to front run a trade, maybe it's not hitting all your rules yet, or maybe it's not hitting your supply or your demand zone or your support resistance or however you trade. Maybe that could be a little piece of data to potentially help you to make that decision. I'm pulling off my jacket, guys. I just think it's awesome. So anyway, guys, that's enough of that. Looking at, and so basically with the top setups here, I think the only major things I've seen change since like yesterday evening looks like, believe it or not, we got the Dow on the list for a bearish signal. So I don't really like selling indices, especially because we all know how high up they've been going. Okay, we've had some pullbacks of late, but there's just, I don't know. It's kind of like gold and silver. Not as crazy as gold and silver, but it's kind of similar, meaning I don't know that I want to be selling something that's just going parabolic to the upside. And if you scroll out to the monthly chart or weekly, then that's what you're going to see, the parabolic move. So let's just go take a look at some of these. Let's see here. Dixie. I want to start off over here. So remember, on the Dixie, we had the dollar index. Okay. It's been in this monthly demand zone since June. So think about it. We had this is a daily chart at the moment, but we had this strong drop. And then once we started getting into the monthly demand zone, you could see where we've been kind of treading, kind of going sideways. Might as well just go to the monthly chart. Okay. So again, we're isolating this monthly candle right here. See that indecision candle? That's an indecision candle because it's basically a doji candle, guys. Doji candles are indecision candles. Okay. You got the big wicks above, the big wicks below, the big wick energy, right? So that makes for a really good indecision candle. Got a gap above it. Now it's not as strong as this gap. Okay. But there's a gap here. There's an inefficiency under here on a monthly chart. There are zones much further down, but especially remember, the higher the time frame, the stronger these zones get. So I want to be paying attention to every single monthly zone and weekly zone, and see if I scroll out, if it's inside, or if my daily zones and 4-hour zones are by chance inside of or trending away from a zone on a higher time frame. So anyway, monthly demand zone. As you can see, guys, like I said, this thing was screaming down back in early May, at the beginning of the Trump presidency, February 11th. Because remember, again, currencies, for whatever reason, the US dollar likes to trend downwards during Republican presidencies. And it likes to trend upwards for Democrat presidents. Okay. So here's Joe Biden over here, right? 2021. Look at that. Straight up. Now, it got crazy and silly there for a while, which is a topic for another day on another stream. But you guys see where it just kind of died off and went sideways. And then you did get your spike again pretty much after the election. And then when Trump comes in, that's just been that steady decline. But now we've been balancing out. Is it any surprise to me that it's balancing out because it did bounce into this monthly demand zone? No, not at all. I expect that. I expect that. Now, the question is that enough of an inefficiency to where a price just turns around and rebounds up? Okay. Or does it want to seek this inefficiency because there's another demand zone right here? In fact, there's another one all the way at the origin of this overall strong move up from pretty much, the early part of the Joe Biden presidency. Okay. Policies change from president to president, right? So there's the start of, Joe Biden presidency. And it just lifted off. Okay, the dollar got a lot more expensive. So are the banks targeting the origin of that strong move? Are they targeting this fair value gap right here, which is obviously just ahead of this demand zone? Who knows? All we know right now is it was a strong decline until we bounced into that monthly demand zone, which is exactly what I would expect. Now, it may still chew through and go down to the next demand zone. Maybe it goes sideways for a little bit, right? And then maybe eventually it drops in to that demand zone like that. So longer, but a little bit of longer term stuff. But really all that matters is I know that we're in a monthly demand zone. We did chew through, I think, the weekly. Let me go over here and look. I just want to double check, seeing if I had a weekly demand zone inside of this monthly. Yeah. Okay. Yeah. So that's going to be that line. Okay. That light yellow box inside. I'm looking at that candle. Well, let's scroll in a little bit. I should probably double check my work over here. Yeah. So that indecision candle on a weekly chart, that doji candle, that's your indecision candle. That's your demand zone candle. I cannot use this candle. Let me turn my drawings for a second. I cannot use, actually, let's do this. Okay. So just so you can understand, where the range is. I'm looking at this as my weekly demand zone candle. I cannot use this candle or any of these candles, even though they're lower on the curve, right? They're lower on they're the swing low. This is basically the origin of the strong move up, but it's an efficient market because all these candles, whether it's up at one time, but then price turned around and came back, closed the gap. Get my goodies back up. Let me get my screen back up, ladies and gents. So anyway, there's no gaps. There's no inefficiencies in the market. Remember, the smart money likes to close gaps and search for the unfilled orders just on the other side. So this inefficiency, and it's not the biggest, by the way, but from the top of this candle to the bottom of this candle, hey, there's your inefficiency. It's not very nice looking on a weekly chart, but it'll look a lot better if we drop this thing down to a daily, a 4-hour. But just looking at this, just looking at what we got in front of us, top of here, oops, I did that wrong. Top of here to there's your inefficiency right there. That's your gap. It's not very strong of a gap, but it is a gap nevertheless. So that tracks back to this doji candle, this inefficiency, or this indecision candle. Okay. I want to beat that with like a dead horse. So anyway, that's what we're bouncing in. As you see the wick, and I'm just going to get rid of that candle there. But remember, this is our weekly chart. This is our weekly demand zone. We've wicked through it, but comes screaming back above it, right? Is that a surprise? No, it's not a surprise. Okay. That's what would be expected. Again, it may come down and it may reject it like it has, and it may turn around and just roll back through it, right? We don't know that. But the point is it stopped it. It at least for a period of time, it stopped it in its tracks. Okay, and that's what we're looking at now on a daily chart. Here's your weekly demand zone. Okay. You got your RSI at the bottom, the momentum trying to swing back around. It may be successful, it may not, but demand zones, especially the higher time frame zones, they do like to stop things in its tracks, even if only for a little bit of a breather. Now, on a higher time frame, even if it is just a little retracement before it drops, is that going to benefit some of the smaller time frame stuff? Absolutely. Is potential buy, but longer time frame, you're looking at a counter trend trade, because this has been trending down on daily. Lower lows, lower highs. Okay, and that's why I kind of drew up that daily supply zone right there in yellow, because what do we got? We got a indecision candle, a doji candle, that green candle. That is on the lower end, though, of this curve analysis. Okay, if I'm looking at this on a curve analysis, we're going to go swing high, swing low. Okay. Are we on the low end of that curve? Yes, we are. Do we want to be shorting on the low end of that curve? Now, obviously, I'm not going to short the Dixie itself, but if I match up the Dixie, if I match up the XE, which is the European currency index, if I'm going to trade euro dollar long because it is on the bullish list, then I have to go to both the euro index like this and the dollar index just to make sure, hey, am I bouncing into any higher time frame supplier demand zones? If so, I might think about being careful. If not, then that makes that trade even better, because I'm knowing that I'm not bouncing into any higher time frame major resistance or support. So right now, the Dixie, as you can see, it has not yet touched the daily or the 4 hour. I put a 4 hour up here as well, because remember, I'm looking for dollar weakness if I'm going to buy euro dollar, because euro dollar is giving me a bullish signal. So, ideally, I would like this to be jumping into the daily and 4 hour at the same time I'm trying to buy the euro dollar, because that's just kind of a confluence. So let's look at the euro. What about the euro? Because I'm trying to buy the euro against the dollar, right? So I would ideally want to buy on a retracement into a higher time frame demand on the euro index. Okay, there's my daily. It's way down here, so I'm not worried about this one. Okay, as you can see, it's just in an uptrend. There's a higher time frame supply zone ahead, but it did not touch it, so that's a good sign. On a daily time frame, I'm getting all these wicks underneath showing rejection from the buyers stepping in. Okay, you see we got a little bit of a gap going on down now, but now I just want to step it down again. Okay, am I dropping into any 4 hour demand zones? There's a couple down here, down a little lower. Not saying that we'll get down that far, but look, we did gap down, did we not? So perhaps I just look at this whole little section over here as a potential support, potential demand. Okay. For the XE, that's just an extra confluence. Okay. That's a good sign. Let's go look at euro dollar on that matter. So that was just a kind of a, oh my God, hold on a second, guys. Hold on 1 second. YouTube Studio is going to be the death of me. All right, euro dollar, here we are. So look at this. Euro dollar just so happens to be in a daily demand zone, but has not yet touched this 4 hour demand zone. So this is all shaping up pretty well. I do not have, I have the, so obviously, guys, I want to buy euro, sell dollar here. Okay. I want it to drop a little lower though. As you see, I've got an alert set right here because if I go to a 1 hour, you see that white line inside of the 4 hour? That's my confluence. So I want to be buying at that point. But now I just do the other step here. Go to the euro and see, oh, guess what? If price drops into my euro dollar demand zone, perfect, because that means the euro will potentially be bouncing off of this support as well, this demand. And same thing with the dollar. If we get a little more dollar strength on the pullback, then this will hit a supply zone and bounce down, which will also be a nice confluence for my euro dollar long. So it is just a nice little trick I thought I'd share, guys. If I were you, and if you have TradingView, I would go and create a little section up here in your watch list and put all the major currency indexes in here. The AXI, the BEXI, the KEXI, the DIXI, the EXI, the JEXI, the SEXI, and the ZEXI. Okay. All those. Because it's a good, and if you want to look at supply and demand zones like I do, that's great. That's what I would recommend. But even if you just wanted to use it to look at support and resistance lines, okay, it's equally a good idea. But just go to your higher time frames and map them out. Okay, like New Zealand yen right now, as you can see, we've bounced into a daily supply. So would it be smart? Would it be smart for me, because I know New Zealand dollar, US dollar is on the bullish list. Would it be smart to be buying a currency that's currently at a resistance line or a supply zone? Probably not. Or if nothing else, you might definitely, put your risk, drop your risk a little bit, because look what happened. Look what happened. Got a little, what do you call it? A little tombstone there. Action after it hit. Okay, this hit yesterday. It hit that supply zone. Now, and it gapped down. Okay? It gapped down this morning. Or I should say, at the start of, well, basically yesterday. Got a wick and then a big drop. Again, I'm not saying it's going to completely reverse the other way, but it will at least get some type of reaction. That's exactly what we got on this candle yesterday. And then slowly it's retracing up. So obviously, if it breaks this high, then that would be a sign of strength saying, hey, maybe we don't care about the daily supply. But at the moment, what happened? We gapped down, which is a pro gap. That is a pro gap. What's a pro gap? A pro gap is when you have an uptrend and you have price gap down like this. That's a pro gap. If price had gapped up, that's a novice gap. Well, why does that matter? Well, if a price gaps up in an uptrend like this, what happens? What happens to gaps? They like to get filled, do they not? Problem is you get a lot of novice traders up here thinking, oh, it's a breakout. I need to go buy it, buy that asset, buy. Well, they've bought prematurely because now they're buying at all-time highs and there's still a gap to fill. But in this case, since price gapped underneath, this is a pro gap, meaning this is where this would make sense to buy because it's in an uptrend and we have a gap to close. So the goal is whenever you're looking to trade gaps, and that's a whole other thing we could maybe look at some point. But when you're looking to trade gaps like this, if you're in an uptrend, you want price to gap down into a demand zone. Because if it gaps into a demand zone, that's a great entry, great potential entry to close the gap, but you're doing it because you're trading like a bank. You're looking for unfilled orders to ride their coattails, okay, to follow them. They're the ones making the money. So if we can latch on with them, makes for some good trades, guys. Another 15 minutes, and we do have the GDP numbers coming out in the core PPI. So I'm going to go through a couple of these alerts. Guys, let me know. Let me know if you guys have anything specific you'd like me to look at. As you can see here on my alerts, I've got a lot. Okay. These are all my alerts. So I'm just going to start going down through these. Now, we talked about the euro dollar. Again, I'm waiting on this 1 hour demand zone right here. Now, when I went to sleep last night, I actually put a limit order on this. on all my accounts, feeling that maybe we could, I didn't really want to miss out on this, but obviously now that I'm awake, I'm probably just going to take the limit order off and just watch it, more real time. Because 2 nights ago, if you guys remember, I put my order on the I put my order on New Zealand dollar before it hit that overhead supply. Okay. And I did end up profiting on this. And then I took one losing trade last night. So let me just show this. Okay, here was my day yesterday down here. So New Zealand dollar, I closed that New Zealand dollar trade out for 14.69. So this was bought off of a 30-minute demand zone. Just as a refresher, I bought this demand zone right here, remember? Okay. So that was the demand zone that I bought right there. And I took price up to here, closed it at this swing high. Then what happened? As soon as I closed the trade, the bottom fell out of it, which I was, not surprised about. And here's the thing. As you see, guys, I had a couple demand zones at the bottom. I was really strongly debating if I wanted to bounce into this, because that's basically a zone on top of a zone on a smaller time frame. And if you look here, there's also a 30-minute indecision candle. So I did not get into this trade because I felt like it was just dropped hot and heavy, like way too hot and heavy. And in hindsight, of course, we don't live in hindsight. We live in the here and now. But in hindsight, yeah, I should have bought this. But think about this. Think about falling knives. Okay. So just to go over here real quick, just to show you. Okay, 5-minute demand zone there. And then down here, there was a 5-minute demand zone right there. In all cases, the volume spiked and it was looking nice. Okay, with a potential stop loss below, just to take into account the wick on this indecision candle back here. The idea would have been to put a stop loss just a couple pips or so below that. But and oh, by the way, it kind of broke these structures over here. So that was the demand zone cluster I was looking at. But I'll be damned, I should have got in the damn thing. Well, what happened was, a price it just dropped. Look how this volume increased as price decreased. So that is effort matching result. And it's also coming in hot and heavy. So it's just too much momentum coming in. Well, when price hit, I basically was looking for a little bit of a break of structure. So you see, I put that little zone right there, that little rectangle. Let's go down to a smaller time frame. 1 minute time frame, ladies and gents. Look at this thing. Okay. So what I was looking at for my entry was the reversal look, the break of structure. So I put my structure point there. I just drew it in the form of a rectangle connecting the top here and the top here. So I just kind of made that little range. And what I was looking for was a retracement down to this candle here. And as you can see, I missed it, or it missed me by just about a pip. See that little wick right there? It just barely missed my entry, ladies and gents. Just missed my entry. So that's the name of the game. Just missed my entry. Look at this. Let's measure that. Okay. 7 pipettes, meaning just under 1 pip. Just under 1 pip. And I would have gotten into that trade. But I didn't break my rules, did I? I wait for unfilled orders. So, as annoying as that is to miss, I was trying to make money off of it a second time, but it just missed. Because the idea behind this trade is I wanted to see it break a structure to the upside. I show you guys this all the time. Got these little swing highs here. I needed to see those highs swept, broken, and closed, and that's what we got. And then a retracement to a newly formed demand zone, because this now becomes a new impulse leg. Impulse legs break structures like it did. So from here to here, that's my impulse leg. I just needed a little bit more of a decline, which basically would have been about 50% fib tracement as well. If I measure that, let me go measure that. Yeah, okay, look at that fib line. I mean, that fib line was right at the 50%. Look at that. That was beautiful. Remember, impulse leg, swing low to swing high, broke this structure that I drew up right here, broke this structure. Hell, there was a second entry even, now that I'm looking a little deeper on this wick here, but I was caring about this one here. I was looking for the discount on this newly formed demand zone on the smaller time frame. And we just missed it. Just freaking missed it. Just missed it. So that was my day yesterday. Okay. 1 for 2 because I did get into probably a rather stupid trade, to be quite honest with you, on this silver trade. Okay. So on this silver trade, I was trying to take advantage of some of this screaming upwards movement. And then we finally got a retracement. Let me see here. Yeah, right here. So smaller time frame, 15. I think it was a 5-minute. Let me just go double check. Yeah. Well, it was 15-minute as well. I might as well show that candle. Okay, so I was basically looking at this 15-minute candle here. Okay, we got a little bit of a bounce, but as soon as no, I guess it was a 5-minute time frame. Let's go double check that. Yeah, okay, that's right, guys. Yeah, I just got too microscopic because I was basically looking at this 5-minute demand zone right here. Okay, that was what I was looking at. No, that's still not right. My God, where did I get in this damn trade at? I guess it was higher up. I forgot where I got in this damn thing. Is that it? I don't know. Either way, guys, it was one of them. I just can't remember the time frame off the top of my head. But as you can see, I got in and I got out ASAP, pretty quick. So it just cut through. It was a zone, I think, I don't know, probably right in here. But anyway, in hindsight, after I saw that, I realized I knew it was a stupid trade when I got into it. Okay, I had a winner earlier in the day, and then I was just basically trying to take advantage. You win some, you lose some. I was trying to take advantage of this scream and move up. But on a daily chart, when you zoom out, you can see we got a big, ugly decline. So a lot of people taking profits yesterday. At which point I thought, well, let's see if we can hop into another leg up. But yeah, that was just one small time frame. I'm going to try again, though, because gold and silver had some pretty nice declines, are they not? Pullbacks. Let's go over here to my regular charts. So here's the thing. It's some pretty strong profits because we chewed through this demand zone here. So I'm going to delete this. We chewed through this daily 4-hour confluence. This pullback might have some gusto because it's actually breaking some rather strong resistance. I was looking at this 4-hour candle here, which was inside of my daily. Now it's pretty high up. So the next step, in my opinion, for gold, okay, as far as a potential bounce back up, is that green drawing you see right there. That's the next, decent looking daily demand zone, and that's cleared down, guys, under 5,000. So we've hit 5,000. Is the 5,000 mark gonna hold? I mean, there's 5,000 basically like right there. So at the bottom side of this demand zone, yeah. I don't know. You guys tell me. What are you guys thinking? You trying to buy into gold or silver? Because we've bounced through that 4-hour demand, so that's no good. Have we broken any of this structure yet? Nah, it doesn't look like it. 30 minutes, 15 minutes. Yeah, I don't really like this area. I was gonna say if we could break, break structure like this, break some of that structure, and then get a pullback, then maybe. But I can't use this as a demand zone because look at the candles; they're just weak, and they didn't even really break much of any structure before retracing already. So definitely not interested in this as a demand zone, potential demand zone. I'm going to move this kind of over here out of the way. But I want to leave it there because it tells me, oh, that was a confluence. But as you can see, it's just kind of chewing through it. I'm just going to lightly color them just to show that, hey, they've been pierced. The potential unfilled orders have been used up, but we also got a really strong rejection from the bottom. So yeah, I might just wait for a retreat, like a break of this structure, and then a retracement back to a newly formed demand zone. But as it stands right now, I don't really like it. Unless we come all the way back to this daily demand all the way down here. But that's at the 4,600 level, which is basically where we were at, 2 weeks ago. Okay. That's our 2 week ago score, 4,600. 4,600, guys, all the way to freaking, what is it? What did we go up to? 5,600. $1,000 jump on gold in 2 weeks from this point here. $1,000. Is that just ridiculous? Guys, let me know if you're looking for, I know I see a handful of you in the chat, so let me know if there's anything you'd like me to check out. Say hello, say something, just so I know I'm not talking to myself. It's always a better stream if I'm, if we're chatting, if you're asking questions, giving me some, some potential to help out in any way, shape, or form I can. Especially because it looks like nobody's in profit this week, according to my poll question I put up. So that's too bad, but hey, we'll get there. This thing's a process. This thing is a process. So anyway, yeah, I'm going to step away from gold. I don't really have any interest in getting involved. Same thing with silver. I mean, it's had a pretty good drop. Silver does have another 4-hour zone kind of down here, but I don't like the trajectory when it left. So I'm basically waiting for this alert I have on silver at $79. Okay, the $79 level. It's basically the 79.80 because the 80 half is the proximal line of this daily demand zone down here. But the 4-hour, hey, the 4 hours right here at 78 3/4. So now that I look at this, I'm actually going to put my alert just ahead of the daily because that is a 80 round number. So I'm just going to want to start watching it at that point. And then maybe we reevaluate it. So nothing on those. Looking at the top setups, okay, New Zealand Swiss, Aussie Swiss. Let's just go start taking a look at some of these alerts I've got over here. Okay, Euro Aussie is the top sell. Grief. Come on. Yeah. Okay. Yeah. Euro Aussie top. Man, there are so many items on the basically every currency pair. Just about every single currency pair is on the watch list, guys. Let me go look at my neutral only scores. Look at that. There's only 8 of the 27, 28 major currency pairs. There's only 8 of them giving me a neutral score. That's it right there. Those are the ones that are currently neutral. That's it. So basically every other one. So that's like what, 75% or something like that. Most of them, guys. Most of the currency pairs are on the list. That's crazy. So anyway, I'm just going to go over here and look at my alerts. Euro Aussie is the number one short. As you can see, I do have a 4-hour daily 4-hour supply zone up here. I've got an alert set right here. The 4-hour zone kind of starts a little ahead of the daily. So my plan would be to wait, not to sell when price just touches the 4-hour. I want to wait. I want to see it chew through and start getting into the daily. And then as you see, I've got some white lines there. That's going to be some smaller time frame proximal lines of supply zones that have gaps. So that right there is kind of my little hot zone. Okay, that's my hot zone. And just for kicks, I want to see where the SVP number goes through here. Okay. Hey, that also coincides with a 50 period moving average. I do believe that's how I had this. Yeah, 50 green line right there. Now this is a 4-hour. So obviously this changes with the time frames. Not a way, we're still a ways away. So yeah, potential retracement into this supply zone cluster or combination or confluence. Hey, right around the time the 50 period moving average is coming in there. Pretty decent little spot. I just like to throw the moving averages on from time to time just to see where I'm at in relation to them. I don't really use them a ton. I use the most would really be the VWAP. There you go. Look at that VWAP to this swing high up here. Origin of the strong move down. Look at that. It's going right through that supply zone. So I got the 50 period exponential move, or was that exponential or simple? I can't remember. So one of the moving averages going through here, and so is the VWAP. So and it just goes to show you that's my number one short idea right there. Now it's a ways away, so it may not get there today. It may take till next week. What is Euro Aussie's ATR, average true range? 100. Okay, actually, yeah, this is one that moves quite a bit. Euro Aussie, 116.6 pips that it moves on average per day. So that's a pretty high ATR pair. I like the high ATR pairs because they tend to move. Obviously, they're a little more of the Lamborghini or the Porsche versus things like Euro Pound, New Zealand Swiss that move, down in the 30 and 40 pip range a day. Just move like the Ford Pinto, slow like molasses. So yeah, I like that. Hell, we could get up there. I mean, if it's moving 116 pips a day, how far are we now? You'll measure that. I want to wait for the confluence. Okay, so yeah, that's still 140 pips away. So yeah, this should be something for next week, guys. Assuming Euro Aussie stays on the bearish, stays on the top setups down here. Yeah, minus 11, very bearish. So if I really want to get into this trade, I'd have to go to a smaller time frame. So let's go take a look just for kicks. Look at here. You guys see I got a supply zone up here we've bounced into on what was that, 15? Yeah, no, 10 minute. 10 minute? Yeah, right here. See this? Look at that. We bounced into it. I think. Let's go magnify in. Did we hit this zone right here? Looks like we might have, or just right to the tick. Yeah. Look at that. Look at that. Price just perfectly nailed. Oh, wait a minute. No, it didn't. Yeah, there you go. That's the wick. So it wicked in beautifully. Look at that. Into this supply zone right here. Wicked in beautifully, and now it's rolling over. Shows you the power of these supply and demand zones. Now, I wasn't too interested in putting a limit order on this thing because did this supply zone, did it break a structure? No, it didn't. Structure's down here. But I did kind of look at this and think, you know what? I could see it just bouncing around and ping-ponging between this demand zone and that supply zone. And so far, that's what we've got. Okay, we got to bounce from the supply. But I'm more interested up here. But again, it's just too far away. So it's not going to, this is a next week type of a trade. Oh, let me come back to this, guys. Let's take a look at our update. Okay, so looking here at the US dollar PPI info, we did have the core month-over-month number increased by 0.5%, 0.5%. Wow. Okay, 0.2 to 0.7. This is core. And then the regular number increased 0.3 from 0.2 to 0.5. So that's a really good reading for the currency, for the dollar currency. The opposite is true for the stock market. Okay, that's a little bit of a negative reading. So again, the PPI, the CPI, those are double-edged swords when it comes to the inflation numbers. What's good for one item is typically bad for the other, and vice versa. So good for the currency. As far as Canada goes, look at that. So they did have an increase from the previous number from minus 0.3 to 0, but it did not meet expectation to the forecast. So it missed forecast by 0.1%. So that is bearish for the Canada dollar. So it's definitely going to drop from the, 57% underneath the 50s, most likely. And it's going to now go to the contractionary set of numbers. Okay, when we're talking about the heat map over here. Remember, the GDP number, the last number was bullish. So now when this gets updated here within, all these things usually update within like a half hour to an hour, something like that. But once this updates here shortly, this will be a bearish reading since it was a miss. And this 57% is going to go down whatever the math turns out to be. I guess I could just calculate that. One, two, three. 3 divided by 6. No, that's not right. 1, 2, 3, 4, 8, 57. So that's 4 divided by 1 second. Yeah. So currently the math works out on the 57% reading to be, you add up the bullish, okay, 1, 2, 3, 4, and then you divide that by the total, and you exclude the neutral. So there's seven releases with a reading of bullish or bearish. We only care about, did it miss or exceed expectations? The neutral ones cancel themselves out. Okay. So currently, if you divide 4, because we have 4 bullish reports on there, by the 7, that's why you get the 57.8%. But now we have to drop that to 3, because this is now a bearish. So now we only have 3 bullish. So 3 divided by 7 is the new math equation for that. And that comes out to 42%. Okay. So as soon as this updates, it's going to be 42%. And it's not changing places though, because it'll still be the new, it'll still be the second, lowest score on here. Again, they've got the rand on here and the lira, but we don't trade those. Swiss francs in the cellar. Oh, actually, I should say, yeah, it was in the third lowest, but now it'll be the second lowest. So there you go. And then again, the dollar just changed on the PMI data. So the dollar did, just to recap over here, okay, increase. So this was a bullish reading. So what was the previous report on the PPI? Previous report was bullish as well. So the dollar's basically staying the same. Staying the same. So it now is the third lowest instead of the second lowest. And the Canada dollar is now the second lowest instead of the third lowest. So they just basically switch places when we're talking about the index over here. All right, back to some charts, guys. Do have about 20 minutes left. So, yeah. By the way, who is here? Who is here? Who is watching? I see some of you guys in there. Just curious to see, where are you at? Where are you located? You guys located in the States? Are you located in Canada, Europe? Yeah, just let me know. Say hello. Okay. This is for you guys. I don't like talking to myself. I like talking with people. So just let me know if there's anything I can help with. Anything at all. Again, I did go 1 for 1 on my trades yesterday. Net positive. That's why my green light is on over here. Okay, green is money. A little lamp over here. So if you guys ever see this green, it means I'm in the money for the day. If you ever see red, then that means I'm in the in the hole for the day. If you see white, that just means, it's too early in the week and I don't have any trades on yet or something. So look for that. That's your little subtle clue as to how my day or week's going. So green week, I like it. Anyway, so yeah, that's Euro Aussie. Just still waiting on here, but it's probably too far away. I'm actually looking at some stocks over here as well. I might as well touch on these. Okay, Microsoft. It's one I'm looking at. Microsoft had a big, ugly drop yesterday. Quite the ugly drop. They had a good earnings report, but the market did not give a shit at all. Did not care. They beat their numbers. But yeah, the thing with the AI, there's just some craziness over there. I don't get too deep into all the news reports. I just look at, some of the basic numbers over here again. Some of the technical, sentiment and financial readings, just like I do on the currencies. Okay. So the reason I got it, it is a buy when we're looking at right here. Oh wait, I'm sorry. I'm looking for Microsoft. It's now it may have changed. Yesterday it was just barely a buy. Yeah, I don't see it. We'll digress from that because I haven't even sorted my stocks. But anyway, Microsoft, and this supply and demand works with everything, guys. But you see this giant gap underneath from way back in the end of April. It just gapped up like crazy in the wake. It left a daily and 4-hour demand zone. Confluence. That's ultimately one of my favorite spots I'm looking at right there. Look at that gap or that giant candle up. Look at the volume spread analysis and the volume. Okay, remember, this is now stocks, so I can look at volume. Okay, that's all spiking, increasing. You don't think we might get a bounce from that if we get price to drop into it? Hell yeah. Okay. So we still got a little ways to drop, but just like trading the currencies, guys. Just want to see price come down and look for some type of break of structure like that before retracing to a newly formed demand zone like that. Okay, that's the play. It works the same. Supply and demand works the same, whether it's stocks, currencies, gold, silver, Forex, or crypto. Anything with liquidity, anything with high liquidity. I don't know that it works the greatest on things like penny stocks because it's very thin liquidity. So things that big banks are looking at, supply and demand works great. But if the banks aren't watching it and it's just retail traders, guys, I don't really, then I'll just go into manipulation mode. I'm not going to go into supply and demand mode because retail traders don't know how to trade supply and demand. A lot of people have a good grasp on support resistance lines, but not quite the idea of unfilled orders and runaway gaps showing, how heavily supply exceeded demand or demand exceeded supply. Little clues like that. Okay. Showing confluence between time frames, meaning different sets of eyes watching those time frames and all that. So anyway, yeah, that would be my Microsoft play, but nothing that's going to hit today. Let's go back to some currencies. Well, just to finish up, I do have an AT&T play as well. Oh, by the way, looks like we did hit the supply zone. So we're in the daily, but we're not quite yet to the. Did that hit? I wonder why I didn't get that alert because I have the alert set. Okay. Let's go look over here, guys. Let's take a quick look at the AT&T ticker. Okay, take a look at this. Okay, so we're getting a -10 score. So that's a pretty weak signal, meaning a strong signal to go weak, strong signal to sell. Okay, so let's go take a look. Yeah, this is a short, guys, all day. A short in a premium spot. Do I want to short from the daily or do I want to wait for this lower time frame confluence? Let's go look over here. Okay, let's look at this 4-hour candle before this strong drop. Now it's pretty narrow, and that's where we're at currently. Ooh, I might be getting into this. So you see the volume that increased on the leg out candle? So the next couple candles had pretty nice volume. Pretty decent volume. Bigger than these candles over here. Yeah, I like that. Let's go down to a 2 hour. Just want to look at a couple time frames on this. We might get into a short here, boys and girls, whenever the market opens. Now the pre-market's up and running, but whenever 8:30 for me here, okay, that's another 45 minutes when the market opens. We'll see what happens because we may potentially be bouncing into some of the supply up here. Ooh. Yeah, I still have an all prime challenge account, so it's got the stocks. We may end up getting into this potentially. Okay, this is my 1 hour chart. So on my 1 hour chart, at the top of the daily supply, you guys see I've got this 1 hour supply. Now it's not the greatest gap, so I may just make my trading decisions based off of this area here. Because look at the volume. Pretty good volume. Now, obviously, guys, this is all aftermarket and, you know, when the market's closed, so there's not going to be any volume. But when it comes to this is basically the, you know, May 8th market open is this candle here, this big ugly candle. So pre-market here, market open. That's a strong decline, is it not? And price has bounced into there. And the fact that it's inside of a daily supply zone, ooh, I like it. Now, you guys know I like daily 4 hour confluence. So what does my 4 hour candle look like? Yeah, it's pretty narrow, but here's, and it's, you know, I mean, it makes sense because this is obviously the, you know, this is a market close on this candle, but this candle is basically, you know, the price action that took place after the lunchtime doldrums. So I'm just going to incorporate that whole thing. And it's not going to be a very big candle on a 4 hour. So we're basically taking into account, okay, you had the pre-market or you had the market open move on the day before. Yeah, I'm going to put this trade on and incorporate my stop loss with the whole daily supply. In other words, stop loss, guys, on this thing, whenever market opens, if I get into this trade, it's going to go up here ahead of the daily supply zone. Okay. So supply zone or stop loss is going to be up here. The 25 half number is here in this area. Ooh, I like this, guys. I like this. As long as price doesn't shoot through the roof here before the market opens, if I get a break of structure to the downside on like probably a 5-minute time frame or something like that, I may be getting into this. I may be going short this market. AT&T, ladies and gents. AT&T. So we'll do a little stock trading today. Let's go back to my daily. Remember, daily, we're in a downtrend, are we not? Daily downtrend. Now, we have broken the structure right here, but I look at this as maybe just a little bit of a liquidity sweep. Is that not a break of structure to the upside? Okay. Is this a place where the banks potentially could be manipulating the shorts? Shorts and the buys, actually. Yeah, that's a nice looking daily candle. Let's just isolate this for a second. Supply. So look at this. So let's look at curve analysis, guys. Is this not a swing high? Is this not a swing low down here? And there's our curve analysis. So are we high on the curve? Is it okay for me to sell something that's high on the curve? Is it okay to sell something that's in a premium area? The top third quadrant? Absolutely. Do I want to be buying anything up here? No, absolutely not. I want to be buying down here in this bottom third. But, okay, bottom third. Now, obviously, you got the middle. That's the diddle in the middle. That's where people get chopped up. But if I'm up here, I want to be shorting the hell out of this. So this is a short sell all day long, ladies and gents. Look at that candle right there. Look at the candle And then the leg out candle, as you can see right here, the volume all the way at the bottom starts growing, starts getting a little bit bigger with each passing candle. Okay, that 3 days after the exit, after the leg out. Well, starting with the leg out candle, but then, yeah, you had 4 red candles going to the downside. You broke structure. Okay, you broke this structure over here and just kept going. Now, at one point, this would have been the swing high, but we've broken the structure. See right here? At one point, that was a swing high, but this area did not hold. So price wanted to seek some more liquidity higher up on a new curve. That's basically what happened. So we move our trend-based fib extension to the top over here like this. And this just paints a beautiful picture, guys. At the end of the day, on the higher time frames, daily, weekly, at the end of the day, the highest probability setups are going to be when you're shorting in the top third, when you're buying in the bottom third. The probabilities go down when you're in the middle like this, because as you can see, you get all this choppy nonsense. Okay, it might trend for a little while, for a short time up, but it's going to go down, down, up, down, okay, down. And now we're just making a screaming move up. So I personally have to see some type of break of structure down. I might even do it on a 4-hour time frame. I mean, if I want to be aggressive, then I'll just short the minute the market opens and put my stop loss up here. But I just need to see some type of a break of structure to the downside, maybe on a 1 hour or 15 minutes, something like that. Remember, this is what it looks like. Where price is now, I need to see price come down and break some structure. Is this structure? Not really, because this is just the overnight, I should say pre-market hours. Then over here to the left is the aftermarket or the post-market. So the ultimate safe strategy is to break this structure over here from yesterday. Yesterday's basically after lunch or the lunchtime doldrums, drop. So break a structure would be, if you're looking at this on a long-term swing position, you'll want to at least see a break of structure of that before a retracement into a newly formed supply zone somewhere up here. Okay. And then you take this down. So that would be kind of your longer-term swing trade. But me, I'm more of a short-term swing trade because I'm only in trades usually 1 to 4 days, 2 to 4 days. So I would be okay personally, just because I've seen these breaks of structures a lot. I would probably be okay with just a break of kind of this pre-market structure, basically. So give me a break of structure like this, and then a retracement back, because this, to me, if we're just looking at the pre-market trading, because the pre-market, this thing's been in an uptrend, has it not? That's not much, but that is an uptrend. So for me to get in this trade, if we can break through the pre-market, swing and then get a retracement, well, then I'll just look for a new supply zone that's formed in here. Maybe that's, whatever, around this area. And then I'd be looking to short it. So that's the AT&T position. Short. Yeah, because I don't think I want to be, as much as I would like to just pull the trigger and short this on market open, I'd rather just see it prove itself a little bit. Let the first 30 minutes shake out, first hour, whatever the case is, shake itself out, and then we look to potentially latch onto a short somewhere up in this area on AT and T. Aussie dollar. Tell you what, let's do this. Let's look at the 8 majors. Well, not all the majors, but a couple of these majors, and then we'll get out of here because we got about 5 minutes left. Okay, Aussie dollar is still a ways away. I do have this daily 4-hour confluence here. You see I've got an alert set at the 69.34 level with the anticipation of buying after we get a break of structure off of the 4-hour demand zone. Okay, it's a little bit midway of the daily zone, so pretty nice confluence in here. I like that. That's giving me a nice bullish score. Okay. Plus 10, very bullish score. Very bullish score. So just looking for a basic drop, and then get some manipulation going on down here, and then we're going long. Okay, that's what I'm looking for on Aussie dollar. Got a little wild with that. But yeah, something like that. Okay, that's going to be Aussie dollar. Euro dollar we already looked at. I'm just waiting for it to drop a little bit deeper. This might be the trade I go into it ultimately. You know what? Actually, I take that back. Euro dollar's a bullish score, but it's only a 6 as opposed to New Zealand. Well, never mind. I keep forgetting. So New Zealand dollar, remember, bounced into the New Zealand index, the ZEXI, or my goodness, the NEXI, the New Zealand ZEXI. Yeah, I'm sorry, ZEXI, the ZXY, the New Zealand currency index. Remember, it did bounce into a zone, so I'm a little skittish on that one. But the Aussie was fine. Aussie and the pound, I do believe. Well, I got the chart in front of me. Might as well go look. Aussie dollar. Am I bouncing into any? Okay, so there you go, guys. Remember, we did bounce in. Australia did bounce into that daily supply zone. So that one's out. The New Zealand dollar is out because it bounced into a supply zone. So do I want to be buying Australia US dollar or New Zealand US dollar if I know that both of their currency indexes have bounced into some overhead higher time frame supply? Probably not. So even though they are the strongest scores right now, I'm going to avoid them. The pound US dollar, let's look at that one. Let's British pound index now. Where's the British pound? Is it bouncing in any major supply zones? I don't see anything, guys. We're a million miles away. Look at this. Was that it? Here, let's do this, guys. I want to put a horizontal line at the top of that just so I see where I'm at. And now I want to go back in time. 4-hour time frame. Oh, wait. No, I need to go daily time here. I'm all over the place today, guys. Sorry about that. Hey, that's the top. That line represents the top. So did it bounce into any major daily supply zones? Well, this price action here in 2021 bounced into that supply zone, so that negates it. But the candle up here that got bounced into did not have a gap underneath it. It was an efficient price structure. So that's where price bounced previously. So in other words, I'm not worried about this as a supply zone, as a potential spot to drive price, screaming down, because it basically was already an efficient price structure as a result of this area here. This price bounced in and started taking away those potential unfilled orders. So yeah, for the British pound, I'm okay with a buy. So let's go look at the pound dollar and the euro dollar, because neither one of them are bouncing into any former resistances or supply zones. So that's a mouthful, guys, but let's just go look here. Okay, British pound, daily time frame. Remember, I'm high on the curve. So if I'm going to get involved with this trade, I'll have to do it on a smaller time frame to where I could potentially look at this down here as my swing low. So pound dollar, I'm pretty close to actually a trio of demand zones. I got my choices there. And then euro dollar. So they're basically looking the same. There's my 1-hour demand zone inside of the confluence for the euro dollar. Do I have the equivalents on the pound dollar? Yes, I do, right here. So really, I got a decision to make, guys. Do I want to buy the pound dollar or the euro dollar? Well, when I get into an instance like this, I go back to the index and see which one is the strongest. The pound dollar is 67%, or I should say the British pound as an individual currency is 67%. Meanwhile, the euro is just a little stronger. So they're pretty close. I could basically take my pick. So I'm not really getting a big difference on the surprise meter, the surprise index. What about the trend? Euro's just been going sideways. The British pound, remember, it was way up here and then it dropped. And now it's just kind of down here. Well, it's basically, again, with the euro. So So it most recently had a decline in value. So perhaps a little bit of information I could utilize. But at the end of the day, I'm just gonna, whichever one hits, guys. Or maybe what I do is put half position on one of these currency pairs and then the other half on the other currency pair. Okay. So that's potentially what I'll be doing between euro, dollar, pound, dollar, and that'll be it. I think that's all I got for you guys. It's 8 o'clock my time. I need to hop up out of here. And I got a little bit of work to do and check out these assets, man. See if I can get in. It's Friday. So as always, I don't like getting 4-hour zone trades. I like to get into smaller time frames. Something I can get into here in the morning and make sure it's closed by the end of the day. Okay. So that's what I'll be looking at. 15-minute, 30-minute supply and demand zones, maybe an hour, but definitely not anything higher than that, because I don't want to be holding anything over the weekend, not when we have all this geopolitical tensions with tariffs, with Russia, Ukraine, Venezuela, threats, Greenland, all that kind of stuff. So it's just a tough environment with all this to want to hold anything. Now there's always problems anywhere throughout some of these major items. I just want to see it cool down before I really get excited again about over the weekend. So anyway, ladies, as always, I'll be back next week. I'll be back at 6:30 a.m. on Monday. And I don't know. I might get bored and hop back on here later, guys. I might possibly get on here just for another quick hour later on. Maybe here in another couple hours or so. Keep an eye on my YouTube page and the live section, and just keep an eye on it. Might hop on. I don't know yet. But either way, I'm gonna get up out of here. I'll talk to you guys later. Bye.